The following BLTV program is brought to you by O'Flaherty Law. Please enjoy.
Hey everybody, welcome back to this episode of the Seize Your Business podcast. As always, I'm the host, Bryan McDonald from OnPurpose Growth, and today I've got Debbie Bloyd on, and she's an expert in the real estate and mortgage markets. And what we're going to be talking about is how the 2019 ended and what, as small business owners, we need to know and pay attention to in regards to the mortgage and real estate markets and how that affects our business. So, Debbie, thanks for being on. And, why don't you give everybody a little intro about yourself, and then we'll dive right in.
Sure. So my name is Debbie. I've been in the mortgage business about 24 years. I have various licenses. I've had a varied life. It's always built around money, though. So I have an insurance license, which allows me to do P&C. That's your property and casualty, your business insurance, and your cars, your house. And then I also do like long-term care and life insurance. So I talk to companies and individuals about that. I'm a mortgage broker. I have my own shop. So I do about 10 or 12 mortgages a month. Refinances, cash outs, purchases, reverses, whatever anybody needs. We also do construction loans. So we do a lot of those things, and a lot of those with self-employed people. So your people will like this. And, and so my background is also financial advising. I've been a financial advisor for several years. And what that allows me to do is help people reallocate money. So when people come to me, I'm just not your little mortgage girl that sits at the bank, although I was vice president of a bank and left there just because most people want you to sit in a little box. And I'm an entrepreneur like you guys are. So I don't sit in a box very well. And so they didn't want me to, I could have my licenses. They just didn't want me to practice. Well, everyone that came in to see me needed the full range of what I have to offer. But the bank wouldn't let me talk about it. So I just went out back on my own. Now I can do everything and talk to everybody about everything. Help them allocate funds, which is now what's going to be happening in the next few years.
Awesome. And so you're asked to speak on the news and in the media because you have an expertise in the real estate and mortgage market. So how do these two markets affect small business owners and the economy?
Well, it affects them a lot. I think small business owners are sitting on the sidelines with some cash right now because they're not for sure what the market's going to do. So we find that a lot of our business owners have a lot of cash and they're trying to figure out, do we buy more equipment? Do we invest in whatever? Well, we've just had a run for the last, 15 years or so of the best economy we've ever had. So if you haven't made money as an entrepreneur, you've done something really wrong. And you need to take some of that money off of the counter and stow it away for the times that are coming up. So this next year, this year was kind of a surprise. The Fed was supposed to raise rates 3 times. Instead, they lowered rates 3 times. So now our rates are still below 3%. This is the 1st of January, and rates are like 3.95 or 4%. 15 years are in the mid 3s. This is what they were several years ago. We never thought it would be back that low again, and we were wrong because the Fed kept the rates low. We have Donald Trump running for president. They're going to keep the rates low as long as they can so that it bolsters the economy because he's running on a pro-business, pro-economy. So hence the economy needs to keep going. So everyone's working in conjunction, which is great news for us. We're still able to buy at great rates. People can take money off the table, and some small business owners are taking money and now they're investing it in their 401ks and their employee benefits because they do need to save a little bit more money. They spend more money on taxes than they need to. And they really need to have like a financial person and a tax person help them with figuring out what they need to do to save more money. One of those things is probably to buy real estate. So most small businesses rent a place. If they could buy a place, they can buy it in their either company name if they have a long enough longevity with that, or buy it in their personal name and rent it to the company. Either way, it benefits them. So there's some nuances that we need to probably focus on going forward while the economy is still going well. It's not going to go this way forever. We're poised for a downturn. Mm-hmm. So we need to take the money that we have and put it to good use. Don't blow it in Vegas and buy some assets while the rates are still low. Because you're going to look back on this, when I bought my first house, rates were 11%, and that was 30 years ago. So kids today, I guess anyone under 40 today doesn't remember those days. So you really need to take some money off the table and invest in your future, because the future is not going to keep looking like this. We've had a good run. That's going to stop.
So if we're reaping the benefits of the great financial future in the recent past, how do we have to look at the real estate market moving forward if we're going to put money into that real estate?
Well, I think we need to buy. So I buy and flip flop properties. I have 2 kids in college. So I took some money out of my IRAs because I don't want it to go down. In the next year, the market's going to turn. And you've got to be poised to want to lose 20% of your money. And if you can't, you need to take steps now towards something else. So I took it out and put it in a real estate that I can fix and flip and maneuver based on my choices rather than the market. So I can't do much about the market, but I can do much more better doing just my own stuff. So I took some of that stuff out because I don't want to lose 20%. I'm buying and fixing and flipping, and you can still find good deals. Now, there's not a lot of bankruptcies and foreclosures right now. That will change.
Yeah.
And so people are not going to be able to buy if they have bad credit, and that's going to happen again. So get ready for that part. The other part is first-time home buyers can't find houses that they like because they're super expensive in most of the markets, and the entry level is I want nicer than what I can afford and qualify for. So they choose to rent rather than buy something that is subpar to them. They also don't want to fix it up. So I'm fixing and flipping things. They don't want to do that. They want to move in. Everything has all been renovated, move-in ready, dust, and they're in. So that's a real big plus for people that want to do the work, want to fix it up, don't mind calling carpet, roofers, window guys, and fixing and flipping and putting renters in there. Renter market is going to be a lot better. When interest rates start rising, people are not going to be able to afford as much house. If they can't afford the houses that they're priced now with the low interest rates, it's going to be worse 2-3 years from now. Rates are going to be higher. They're not going to afford it now. They're not going to afford it then. They're going to be great renters. So while it turns bad for the first-time home buyers, it turns really good if you're an investor that want to put some money down and get some rental properties.
So it's like, take your wins from the market.
Take your wins off the table now.
And put them into a new place that you'll be able to win because the real estate market's going to change.
Right. And, sometimes we can't take everything out. Like we've got 401k money, you can't take it out. IRA money, not without a penalty. But you can change the mix of investments that you have in those to where they won't get hit as hard. So that may be healthcare, that may be IT, that may be real estate. But like for me, I took my hit now. So I'm 55. I'd rather take a hit now at 10% and build it back than wait till I'm 65. Interest rates are going to be higher. I guarantee you taxes are going to be higher in 10 years when I want to take that money out. So I'm going to take it out now at a low rate rather than a high rate later. And I'm going to make it on the outside of my investments. Now, I'm going to invest in gold. I'm going to invest in some stocks and mutual funds again. But I wanted to clear the table of my winnings, and now I'll start over. Yeah. So, and some people will write it out. And it depends on when you want to retire. So that's the big question for all your business owners. You build this business. Do you have an exit strategy? Do you know how you're going to get out? And most of mine don't. I have a jeweler right now that he's like, Debbie, everything's changing. It's on the internet. I don't know how to get out. I'm just going to shut the doors. Well, he's lost all that. He should have been out years ago, or should have had an exit plan with a successor. He didn't. So he's going to have to sell his house and kind of regroup now, but he's 75. That's kind of late to regroup. You've got to regroup in your 50s and 60s when you can start again and have some time. Besides, entrepreneurs are not going to stay retired very long. I don't know what I'd do if I retire. I mean, I work all the time now. I play golf now. I have 2 kids in college. I got to get them through college, without breaking the bank. And I need to stay active and do all my stuff. If I retire, what am I going to do? So I'm not planning on 65 or 69 or a specific age. Our health is really going to matter to these entrepreneurs. And I work with a lot of self-employed people, and they think nothing's going to happen to them until it does. Right. And then they have a stroke, they have a heart attack, and now all of a sudden something's changed and they weren't prepared for that, because one of my clients is like, I don't want to talk to you about long-term care anymore, Debbie. I'm going to die healthy. And I'm like, you're not, right?
That's an oxymoron. That's an oxymoron. You
so
can't.
You're going to get sick, and you're not going to usually fall asleep in your sleep, and you're never going to wake up. You're going to have a health issue that's going to take a lot of cash. Yes, you've got insurance. It doesn't pay for everything. So, I mean, I wish people would listen to me like I know what I'm talking about, because I see it with clients, but they come to me after the problem. They come to me like, okay, now I had back surgery. I can't go back to work. I guess I must retire, but now I don't have enough.
Right.
Well, did you think you weren't going to wear out at some point? So our self-employed people kind of need to plan for this. So you need to have a backup plan. And that's not going to go right either. So you're going to need another backup plan. I'm on like my 5th backup plan, right?
Yeah, right.
So for me, I have different levels of income. I have insurance, I have mortgages, I have different columns, if you will, of income. Your business owners need to think of that too. This is my job, but what else can I do? Can I lease a space? Can I rent space and become a landlord and take some of my winnings and buy something and have renters for business or for homes? What can I do to diversify a little bit? Because your plans aren't going to work out the way you think. They just never do. And you need to have options, and money gives you those options. You may not like your options because it may not be your first choice, but you still need to have options.
Right. And it, I love what you're saying here, because it even applies to, the money that was made coming up to now.
Take it off the table unless you want to lose 20% of it.
Exactly.
Just don't get, because it's going to go down. So I was telling people, we move people from maybe mutual funds to annuities. Mm-hmm. I don't know what people think of annuities. They are a guaranteed income for life. Mm-hmm. They're an insurance product. They're not a security. It keeps the lights on.
Right.
That is your safeguard money. If you don't have that, you need to balance out your life with that a little bit so that you're not covered. Social Security isn't going to cover it. If you're self-employed, you haven't been paying in that much anyway. So you can't count on that. You have to start setting money aside. And those annuities, even though people go, I don't like annuities, I lost money in them. Okay, well, you're never supposed to buy them and sell them. You're supposed to buy them and they pay for you to live either a set period of time or a set amount of money. So that's not a security that you buy and sell. So some people buy them for the wrong reasons. They don't understand what they're buying. Right. And then they feel like they didn't do well because it's not an investment. It's to safeguard you. It's like life insurance, health insurance, auto insurance, home insurance. At the end of the time now, there's so many great insurance policies out there that do long-term care and death benefit. So if I get hit by a bus today, the loans will still get closed. I got a processor, so that's good. So everybody's going to still get their loans done. But my kids will either be paid upon my death or if I use long-term care, but it's a hybrid policy. So before, a lot of people have these old policies that are just long-term care. If you don't use them for that, you drop dead of a heart attack, you've lost your policy. People need to look at what they own, upgrade what they have into something more current and better. Don't put all this stuff off and don't want to talk about it, because if you buy the wrong product for what is happening to you, it will not be beneficial.
Well, and I think it's very similar and parallel to what you're saying before about how you diversify the ways you make money. You're also diversifying the money that you have, so it performs different ways. Is that right? Right.
I interviewed a guy, I do a radio show too, and I interviewed a guy about gold, and I've never I don't have any gold, but I started investigating it because it's lower right now, and when the market goes down, gold will go up. Does that show right?
Yeah. Yep,
so,
you got it.
So you need to figure out where the market's going. And you know what? A lot of people make their millions betting against whatever's happening. So I'm betting that the market's going to go down. Mm-hmm. So that means I'm going to start buying investments that do better when the interest rates go up and the stock market goes down. So it's just taking time. I don't want them to be so busy in their business that they forget what to do with their money.
Right.
And they need help for that.
Absolutely. So as we wrap things up here, you made a comment earlier that this year is you foresee everything starting to change, right? That the economy is only going to be great for so long. So what are some of the things that we as business owners that can pay attention to or should be paying attention to give us the signs that, hey, this is the economy turning?
I I would diversify what you have. So say if you sell signs and make signs for a living, I would figure out, are you renting or can you buy something? Can you be a landlord? Can you invest in yourself? I always trust me more than others. And then if you've got income into your business, do you need to pile it back into the business, or do you need to take it off the shelf? And that's when a good financial planner and a CPA can work together with you. You can set up some employee benefit programs. There's all kinds of SEPs and 401ks for just one-man shops so that you can set money aside. Do you need to take some of that money off? Because we don't want you to pay any more in taxes than you need to. You might as well save it for your family. Or do you need to hire family members, put them on the payroll, and diversify your money that way? There's a million ways to do it, but you just have to realize that the economy is going to slow down. And when people get nervous, it's all regional and it's all family orientated. So I have a good outlook on the future for mortgages, and that's my primary line of business. But if the market stopped and I had no more mortgage business, that's okay. I've got an insurance license. You always need property casualty. I'll sell more of that. I'll do more long-term care. I'll do more reverses because I can diversify. If you're just the guy that makes the signs and there's no new businesses coming into your town and people are nervous about upgrading things, they're not going to buy new things, then you need to diversify your stuff before you get to say, we're like, oh, the sales stopped. Well, if my family's doing well, I'm going to go out and spend money. If my business is doing well, I'm going to go spend money. If my personal atmosphere is that my husband might be laid off or my wife might lose her job, then we're not going to buy a bigger house. We're not going to go buy a new car. We're going to hold what we have. And then people become very protectionist. And then they don't want to invest money. They don't want to spend money even to protect themselves. They'll go down with the boat because they're scared. So get a jump start on being scared. No, prepare for the worst, hope for the best. Now, if the Republicans do not win in a lot of the elections, the economy will turn. You just need to be ready for that.
Right.
But even the uncertainty is going to make people sit on the sidelines with their money. So this is when you can take advantage of that. Don't be scared. Get out there and make some changes and anticipate it being worse. That way the changes you make will benefit you in the long run. Because the worst that can happen is you buy securities or you buy something and you can turn around and sell it if it doesn't do what you think it's going to do. Worst thing is to leave your money in those IRAs and 401ks, write it down at 20% and then sell it.
Yeah.
You've got to be willing to write it down to the bottom and then write it all the way back. Whether that takes 5 years or 10 years or 12 years, you got to hang on to it. The only people that saw the losses in 2008 were the people that bailed at the bottom because they were scared. And it's all fear-based, so fear-driven. So just anticipate it being kind of icky and then plan for that. And then if it's better, then you're in better shape.
Yeah, exactly. So, well, listen, Debbie, please share with us how people get a hold of you and everybody listening or watching. If you don't write it down, don't worry. We're going to share this wherever this is posted. So please share with everybody how they can get a hold of you and find you.
Okay, so I have a website called moneystrategieswithdebbie.com. They can find me there. I also have a mortgage company website that's called dlbmortgageservices.com. And then my phone number is plastered over everything already. You can find me on Instagram, Facebook. I can share my number. It's 979-220-3018. Used to be up on a billboard in Dallas. So I figure if it can sit up there for a while, everybody can have it.
Yeah, exactly.
So text me, email me, call me, whatever. I'll be happy to help. I'm licensed in a lot of states, so I can help in those states. And if not, I can refer you to great people that can help you.
Perfect. Well, Debbie, I appreciate you being on and sharing this information because it was a learning process for me, and now I understand more. So I'm glad you blessed everybody else with that information. So thanks again for being on, and everybody, if you found what Debbie was talking about was interesting, reach out. It doesn't hurt to have a conversation and see how any of this would apply to you. And
I don't charge to talk to people. So people call me all the time and chat, and I try to get them on the right path.
Cool. Perfect. Well, again, thanks everybody for tuning into this episode of Seize Your Business. Again, I'm Bryan McDonald with OnPurpose Growth, and we'll see you back on the next episode. Take care.
Thanks so much for watching our video. If you have any questions, feel free to comment below. Click the subscribe button for new videos every week, and download and review us on iTunes. Visit learn-about-law.com for other legal-related articles and videos. Visit our business podcast and video blog, seizeyourbusiness.com, and visit Making Real Estate Fun for real estate videos and podcasts. Call us at 630-324-6666 for a free consultation.